Hi, how are you doing today? My name is Jason Miller. I'm a doctor in CBD cannabis research and development products, and I actually work right now in the financial services industry. And I want to take the time out to share some information that I've learned in my time in research and development as I've applied that now to the analytics of financial services and how the market in the world is changing. Something I learned from a biblical standpoint is seed, time, and harvest. As long as the earth remains, there'll be seed, time, and harvest. And I want to share a little bit with you about that. And in today's message, I want to take the time to first things first ask you, please, ladies and gentlemen, if you find value in this, please like, share this information, and of course, comment below and give me some feedback. Of course, like I said before, my name is Jason, and I work with Patrick Bet-David. Not work with him personally, but indirectly. I'm a recruiter right now, and I work as a recruiter for an FMO, a financial marketing organization called PHP Agency. That company was built by multi-billionaire Patrick Bet-David. Now, Patrick Bet-David lives right here in South Florida. He actually just bought his $25 million mansion on Fort Lauderdale in the coastal. Million, beautiful house. But he lives here in Florida. And of course, Valuetainment, the number one YouTube entrepreneurial channel on YouTube. So please follow, like, and subscribe to that channel as well. Now, what I want to talk to you today about is very simple. Two topics that impacts us directly and on a large scale. First things first, I want to talk about PIP, and I'm going to give you a specific, distinct description of what I mean when I say PIP. But I'm talking to you about PIP and insurance. No, not PIP insurance. Different conversations, but they revolve around one essential thing: currency. Now, when you talk about currency, you think about water because water flows, right? Water flows. And if you think about water being liquid, the earth is made up of 60% water. Us as human beings, we're also made up of 60% water as well, right? Now, how interesting is that? Now, consider us being all water. Now, what we're talking about in this aspect is currency. But what's so also interesting about currency, for currents, the water to flow, it requires riverbanks, banks to flow the currency. With that being said, we're talking about the banks right now. Okay, so as it relates to the system and what we're seeing the witnessing the death of the US dollar and the current failing of our current economic financial system. Now, that's going to change some things. That's going to radically revolutionize some things. Some people are going to go out of business. Some people are going to work on being even mega millionaires than they are right now. And some people are going to wonder, like, what the hell just happened? But you're going to see a difference as we talk about A, PIP, and also B, insurance. And the reason why it revolves around C, the banks, is because people like you and me normally put our currency in where? Banks. And again, remember, we talked about banks for rivers are set to flow currency. So us as 60% beings, we put our financial currency in the banks. And the banks that we put our money in, 85% of people put their money in banks. Now we see the failing of the banking system. Now, some people have what they call FDIC insurance on their money because, again, money is also insured to a certain amount. So if you make less than 250,000 or you have less than $250,000 in the bank, you don't necessarily have to worry about your cash flow being interrupted because it will all be insured. However, if you are making over $250,000 a year and you are a millionaire and you hear something like the banks are failing and they're not insuring anything over the FDIC limit, you are like, what am I going to be doing with my cash? That means 75 or even 95 or even 99% of my cash flow in most cases is going to be gone or unprotected. So what do people look for? What do they do? Why is it important to understand? Again, the financial market is changing, and as us human beings, we are going to have to do different things with our currency. And that's why I want to have the conversation today about currency, cash flow. And the reason why cash flow is important because this conversation about PIP and insurance revolves both the flow of, you're right, you said it, currency, cash flow. Now, first things first. Again, I want you to take the time to like this video, subscribe it, share it with a friend if you got value out of this content, and make sure you comment below and let me know exactly what you thought, exactly what your thoughts are, and exactly what you see based on what this conversation. Let's keep the conversation moving forward, okay? Now, as it relates to insurance, understand insurance and understand PIP, But first, let me describe PIP. What does PIP mean? PIP means passive income portfolio. That's what you're looking for with the PIP. That's what it means. Passive income portfolio. Everyone wants and needs a passive income stream. Everyone. Don't care what you do. In America today, it's virtually impossible to just live on one stream of income. Virtually impossible. Based on what you do or how you're living, maybe you might be living better than others, but how long will you be able to sustain that quality of life based on how the world is changing? And that's exactly why we're having this conversation, because 85% of people normally put their money in banks. The river flows through currencies, and those banks require the flow of currency. So the banks take our money, and the banks also invest our money, but we ourselves, the banks, encourage us to keep our money in the banks. Save it in the banks. Why? So they can loan that money out and make interest on that money. That's what the banks do. Now, the banks typically make like 12, 13, 14, 18% on the money that you put in the bank, but they pay you like 0.11 or maybe 2, if you're lucky, 3% on what you're getting in the bank. Now, that's just what the banks do to encourage you to put your money in it as a way for you to say, oh man, I'm gaining interest on my savings. However, you're getting that interest annually at the end of every year. The banks, however, now, before I even get to how the banks do that, I should let you know the reason why we're seeing this incursion in the financial market right now is due to fractional reserve banking. Fractional reserve banking is a law that was passed that allows the banks to be able to loan out 90% of the cash flow and not keep it. So as a result of that, they no longer have money when people come to withdraw their money. So you put the money in the bank as they ask you to. They take that money, they lend out 90% of it. You go back for your money, and they don't have it there. That's why the banking system is changing. I have to explain that. So when you understand that the banking system is going to be changed, you need to understand where, how, when, and why. Who, what, when, where, why. What's going on. The 5 W's. That's what we're going to talk about in PIP, passive income portfolio, and B, insurance, because 85% of people put their money in where? The banks. All right? We can all understand and we can all agree to that, correct? Yes? Yes? Okay, good. Now, the second thing I want you to pay attention to, which is equally key and important, that 15% of people, or should I say 80% of people, put their money in banks. 15% of the people put their money in investments. You're talking about the stock market. You're talking about those, long-term investments. Now, those people who put their money in the stock market, it's highly risky, but they also reap the benefits and the rewards. So when you see the S&P 500 and you see the stock market now, do not confuse the stock market with the Federal Reserve. A lot of people do that often. When you see the two, they're completely different. The stock market and the Federal Reserves are two different things, okay? Pay attention to that. And I want to make sure that's very clear, because this is very key into why this thing is happening. Keep in mind, the Federal Reserves flooded the markets with money because they print money. The stock market, S&P 500, requires money to buy the stocks into those companies, so they're not the same. Now, the S&P 500, based on those stocks' yields, as it performs in the company's performance, you as the stockholder or the shareholder in the company, you gain the dividends or the increase in your stock portfolio, PIP, passive income portfolio, as an increase in value. However, on the other side, the Federal Reserve, they print money, flood the market, but they also dictate the interest rates, as you see, as we're facing right now with these high-ass inflation that we're facing right now. But I want to get to the point, because only 80% of people put their money in the banks. 15% of people put their money in investments. The other 5% of people put their money in life insurance. However, only a few of those people are able to acquire and sustain and enjoy long-term PIP, passive income portfolio, where they get that income passively based on their investments. Now, how is that? Now, the reason being, if you are making your money and you're putting your money in the traditional banks, yeah, you're only going to get 3% every year or 1% every year. So if you got $1,000, you might get what? $10 at the end of a year? How long is it going to take you to double that 1,000? However, What people are doing when they put it in the stock market, it gains higher, but there's also chances of losing. When they put it in insurance, especially life insurance, it is tax free and it becomes a tax free vehicle for them to be able to gain substantial interest, like 14% or higher, still maintain their cash value, and also have a death benefit. So it gives them three value or three benefits in one by being a life insurance policy. Many people are completely unaware that the number one loophole in the tax laws is life insurance, okay? Not real estate, not your 401k, not your IRA, it's life insurance, okay? And I'm not a tax professional. I'm just a recruiter from a financial marketing organization that is a doctorate in CBD product development and research that has taken the time to do significant analyst and data analyst driven data numbers on the financial services industry, as I'm now a recruiter for this industry, because I want to help to educate people and families on what it means to really be financially literate in these times, okay? Because you need to pay attention. PIP. How can you attain PIP? Now, for me personally, I'd much rather chase you to help you to understand the value of life insurance to make sure that your family's protected than your family chase me for me to then give you a GoFundMe after you die and you have nothing for your children. Fair is fair. So if you're willing to say no to me when I'm offering you, say, hey, listen, man, you should increase your life. You should better your life. You should protect your family. You should make sure you have some benefits. You should make sure that your family's protected. You should make sure that your children at least have some. And you say no to me because you don't want it. It should be fair to me for me to say, listen, man, oh, you've done, oh, man, I'm sorry to hear that. No, I'm not going to give you any money for GoFundMe. I can't do that. I'm not that type of guy. I'm not saying I'm going to do that if you're a person that passed away, you don't have insurance, and your family needs to GoFundMe. I'm just saying you should be paying attention to do a couple of key things. First things first, what am I doing to protect myself and my family? Now, let's discuss insurance. Now, if you have a bank, your money is insured in the bank FDIC insurance. If you have an iPhone, chances are your iPhone has some kind of Apple insurance. If you have a car that you drive responsibly, chances are your car has some kind of insurance. If you own a home, rent a home, chances are you have some kind of insurance or property insurance. Now, in addition to that, if you have health, you chances are have health insurance that you also pay for as well. Now, if you're paying all these other insurances, why would it not be valuable to insure your life in case your life is cut short? Because you have to understand, these are one of the vehicles that are set up to be able to pass generation from family, generation to generation. This is a way to ensure that your family, you see, there's a saying by Bill Gates, you might not have a choice in the family that you were born in. So if you were born poor, it's not your fault. But if you died poor, it is your fault. So in this world where you can invest in yourself, life insurance, a tool that literally is tax-free, that can provide tax-free income and free you from a lifetime of suffering, and you don't, and you die poor, and your family then doesn't get the benefit. So it's not like, okay, you suffered, but in your death and passing, your family was able to then gain a financial benefit because tax-free, they were able to receive a reward, or you were able to set it up so it was able to pay for their college. You were able to set it up to pay off the home. You were able to set it up to give them stipend income for life. Because you could do that by a policy. Set it so your family gets income for life. But if you're not paying attention to the loopholes or the laws of the land, how will you ever understand? And that's kind of why most people who have a 9-to-5 job and put their money, currency, or flow of currency in the traditional banks, they don't have a long-term retirement outside of their jobs. And in this season of it started off as the Great Resignation. Do you remember that? Right as COVID started? So right as COVID started, it was the Great Resignation because everybody wanted to resign to then do things different with their lives, right? Then it went from the Great Resignation to the AI 5G revolution. And with the AI 5G revolution, there was a peak and uptake in jobs. But then after that, it became the Great Firing, right? Like the Great Depression. So now people are laying off left and right. Companies are laying off tens and thousands, hundreds of thousands of people have been unemployed. So check it out. In this, I shouldn't even say hundreds of thousands. 14 million people are going to lose their jobs in the next 5 years. 14 million people here in the United States of America due to AI, just artificial intelligence. So when you hear 10 million here, or sorry, 5,000 here, 9,000 here, another 11,000 here, another 20,000 here, another 4,000 here, it's just adding up like 1, 2, 3, 4, 5, count to 100. Why? Because you're going to lose 14 million jobs to AI and artificial technology. In addition to that, they're planning to institutionalize a social credit system based on the institutionalizing of the FedNow system that will be empowered by the central digital currency and their Fed coin that they're planning to roll out, which will completely do away with paper cash currency. And in doing so, they will control you, your activity, and give you a set stipend for your life and living, and you will love it and not say a thing about it. Because if you say anything about it, you will lose it. Now, do you want to be subjected to that? Or do you want to understand ways that you can invest in something like for less than $200? So say you have $250 in your bank right now. Most people don't have that today, do you? But just take an arbitrary number. Say 250. Say you have $250 in the bank right now. What can you do with that $250 to make a difference for your life and your family? First things first. A, you can get started in the financial services industry. Go to google.com right now. I talked about it earlier. Google, what industry creates the most millionaires in the world? Don't worry, I'll wait. Google. Oh, I'm sorry. www.com. Oh, I'm sorry. www.google.com. Enter. Go to the space bar. What industry creates the most millionaires? Financial services industry. Now, the best thing I want you to know, or the greatest part of this, is that you don't need to have a Ivy League or a Ivy or an Ivy League education to be part of the financial services industry. Facts. You don't need to even have graduated high school. So if you are a person right now that college wasn't for you, right? So college wasn't for you. You might have did a couple of the things in your life. You're not where you want to be in life, but there's more for you. The world is changing around you. The financial market is changing around you. What are you going to do? Are you going to continue to play in all those other industries, or are you going to pay attention to the number one industry in the world? Now, let's talk about PIP. How can I use that same 250 to then benefit myself with PIP? Have you heard of a REIT? That's called a real estate investment trust. Now, I'm not going to give you so much information that will overwhelm you on that. I just want you to understand. If you want to establish a family legacy for yourself where you are licensed in the financial services industry, it'll cost you less than $250. So less than going out for dinner on the weekend or partying on the weekend, you can get licensed, certified in the financial services industry and start making millions for your family. Guess what? Less than going out and partying on the weekend, you can invest into a REIT and start earning passive income, slowly building to create generational wealth for your family. But if you want to learn either or, you want to find out you want to get out of the 80% pool of people who only keep their money in the banks. Now, keep in mind, the banks are going to change. FedNow is launching in July. So July 1st, when the tax returns roll out, everybody's getting their tax returns in the FedNow system because the CBDC's been already implemented. Central Bank Digital Currency System, FedNow. So they're rolling that out, and by May of next year, they're going to be doing the Fed coin. And they're going to be doing the Fed coin to compete against the Chinese yuan, because the Chinese yuan is already digitalized, and China is already competing against America right now as the dominant currency and has been taking over that global market so far. So because other countries are getting off of the US currency right now as the number one currency to use and are accepting the Chinese yuan, more companies and more countries are going to be filing suit. As you see, France wants to now buddy with China, even though they were all against Russia in the whole war, and China is in bed with Russia or close ties with Russia. I wouldn't say close ties. They only have like an unlimited like bro partnership. I wouldn't say like it's
I wouldn't say that. They just have like an unlimited partnership as it comes to this, military stuff. But apart from that, I'm not gonna say like France is opposed to anything. I'm not like France said anything about it, right? Or did they? Anyway, I'm not gonna get into the politics because that's it. It's just politics. And when you get into the politics, you, the American people, you are lost because you keep your money in the banks and the banking system gets changed. You're the one that's stuck. So I invite you to learn more. You want to learn more? You want to find out more? Give me a call directly. I invite you to give me a call directly. I challenge you personally. Give me a call directly. Let's chop it up. You want to find out more? You know what? I should not even give you access to me. But personally, if you right now don't have access to the information, where's you going to get it? So I invite you to come to my office and learn about it for free. So instead of calling me, come and see me. Because I might be busy on the phone and I don't want you to take it personal if you can't see me. But if you come down to my office, whether this is 15 of you or 20 of you, I got a group of 150 of you. Come on down. We educate companies, families, communities for free on financial services. I don't charge you a thing. So none of the services that we offer, there's a charge to it from me or anybody in our company. Because what we do is we offer free financial lifestyle strategies for families. We help you put together a blueprint for your family, help you to understand what kind of protection you need, and also give you an understanding in what kind of investments you should be making to protect yourself. And that's something for you and your family for the rest of your life. Yes. So I invite you to learn more. Where's my company? Where am I located? 6030 Hollywood Boulevard. That's right here in South Florida. 6030 Hollywood Boulevard. Suite 230. Yes, you're invited by Jason Miller. So when you get to the front, you might see David, you might see Jeanette, or you might see one of our other agents there in the front. But just remember, when you come in, let them know Jason Miller invited you. And I'm inviting you to learn about three primary things. A, infinite banking. B, tax-free retirement. C, index universal life insurance. Because these are the ways you, my friend, are going to be able to set up A, tax-free income. B, lifetime income. C, passive income portfolio. So you want to reach me? Get at me. The link is below. That's my time. As always, God bless. God's best.